Welcome everybody to Navigating the Minefield. And once again, I'm here with Eric to talk about everything from macro to crypto and of course, mining and the miners and commodities. Eric, good to see you as always.
You too, Roger. How are you?
I'm very, very well. I think we're going to go across the board today and look at not just the mining space, but we are actually going to have a bit more of a look at crypto. But before we start, as always, I'd like to say that none of what you hear today is going to be investment advice. This is all for engagement and entertainment purposes only. Do your own research, know your limits, know what you're investing for, and then invest accordingly. So this week, as I said, we're going to touch on, let's kick off with a bit of crypto, because you've just been to the Consensus 2024 event, which was, I think, in Austin. Was that right?
That's correct, yes. I've been to Consensus twice before in the earlier years in New York. It's the first one I went to in Austin. It was a good, robust, turnout. Didn't feel frothy, but it didn't feel, dead. So it was good.
And this is all in that. This is really focused on the sort of digital space, the crypto space, and it's kind of a grown-up meeting of minds in that sort of arena. Is that right?
For the most part, yes. I mean, you get everything from some of the OGs of the netherworld to institutional product offerings. There's a lot of different news coverage from even places like Kitco and anything from CoinDesk, who sponsors the whole thing. They're out there putting a lot of content out there with speakers in various areas, looking for thought leaders, and so it's a good mix. It's a very good mix.
This is obviously a market which is getting more and more mature now. There's no sort of doubt about it. What were the sort of key things? Because obviously you've got all these people together, and when you look on Twitter, everyone's still going, "Oh, 70,000 is a new 10,000, and we're off to 1 million on Bitcoin," and all the various other things. But what about actually, when you have these conferences, what are people actually talking about? Because you talk about institutions, and institutions need regulation, and this bizarre thing, isn't it, that half of this world was supposed to be outside of the world of basic regulation, yet regulation is what's required to bring in the institutions and the really big money. What sort of features were the commonality at the meeting, or at least what were some of the sort of main features that were being talked about?
Well, I don't focus too much on main features. I try to find an angle, that somebody who's some folks that have, accumulating some viewpoints that are connected and also forward thinking. And I think, it's funny you mentioned that about the Twitter consensus right now. I don't know that I see that, 70 is the new 10. We're going to 1 million. I'm not seeing that much bullishness. And I also feel like the bigger money, I'll give you one example. Mike Novogratz spoke, Galaxy Digital was one of the keynote speakers, if you will, on, I think it was the Thursday evening. And, the regulatory environment was definitely front and center. I thought his perspective was very good in the sense that a lot of the institutional money, it's coming, and it's actually what, in his words, and he's got a very good, I think, perch in which to look at this from, being that he's trying to build the Goldman of Web3 and digital assets at Galaxy Digital. And so he's right in smack dab in the regulatory environment. They have, the scale and size so that they're actually in Washington, D.C., talking to senators, talking to Congress people, talking to the regulators quite often. And his, comments that struck me were, number one, just starting things off with Gary Gensler's regime is at the back end, of its existence, not at the front. Just politically speaking, you could see him, even with a new Biden administration, go away soon. Or certainly if you had a different administration come in, he's gone. So he did note that. And, I think that that's been, we've had a very special group of individuals that have been in here setting policy and restricting policy. And I think that there's more and more acceptance and awareness that I'm sensing from even listening to people like Hester Pierce, who's, senior in the SEC, also the head of the CFTC. I forget her name, but there was one particular breakout session talking to them. They're not coming to a crypto conference to sit there and say, you're all going to die. They're coming to say, we're working with you. We're trying to understand this better, and we're pushing it forward. We think it's important. And I think the same thing with somebody like, Novogratz, who said the worst in terms of like the thought back in, I remember this as well, back in 1920, we're coming out of the bear market in crypto and thinking to ourselves, is this even going to survive? We don't know. We're taking a big bet, but it's so unclear. We don't know that this is even going to be a survived asset class. Now, that's not really that big of a massive concern. It's more like it is going to survive, but in what form? Regulatory wise and otherwise. So the view from the consensus, I guess I would call it more connected hierarchy of views that I saw. And this included, some of the people that were speaking that I caught tidbits of were like Brad Garlinghouse from XRP. He beat the SEC. I think at least certainly a draw to a victory with the SEC. You've got, Coinbase, who's fighting regulations in the United States. And a lot of us now are realizing, and I think the politicians are too, that this is a voting issue. This is a political issue for many, many Americans. And that is going to be more and more of a topic that gets out there. And there also has been some, look at the ETF for Ethereum. I think Mike Novogratz was the one who made a comment. He said, how did that just get pushed through? He's like, I have no way to tell you how that happened other than somebody made a phone call. And it was a constituent on the left saying, listen, we can't be the bad guys with this. It's a problem. Put it through. I don't know what happened. I really don't. But that would seem to make some sense to me.
And do you think that kind of with this, it's almost, again, this sort of maturity that's coming through. Do you think that alters the price dynamic? Because a lot of people have loved this space. You've talked about the 650X and stuff like that. That parabolic move. Do you think in a world where it becomes more regulated, more institutionalized, more almost moving into a traditional mindset, do you think that means that we have to look for building gains, as in what I mean by that is gains that build over time? Or do you still think that this is an arena where you can get those 10, 100x type of returns? Because maturity often means less volatility.
Absolutely. I think we've talked about this a bit in the sense my feel for it is that this might be the last 10x from lows to tops, in the BTC ETH realm on the top side of the market. Let's just look at Bitcoin, 16K to 160 plus, I think is very reasonable in this bull cycle. But how many people bought at 16K? It was the same thing though before that, right? You saw a move to 66,000, but how many people were in there right after, the March COVID crash of 2020 buying at 4,000 so that you made 15 times your money? It's the same dynamic. These are still market principles. So you have to build. You have to build, and you have to, in my opinion, the biggest skill set. I was talking to a younger guy in the trying to get into the investment business, into crypto, talking about some of the dynamics that I've learned. I said one of the biggest, two of the biggest things that I've learned in my career that I think have helped me are, one is, are we in a bull or a bear market? Finding that out, whether that's a macro, looking at macro and within that theme, within a sector, it could be any sector, is it in a bull or a bear market? Figure that out. You've got, I think fate on your side a bit. And then also the ability to have awareness of our own extremes and feelings, whether it's fear or greed, and being able to A, acknowledge that, but also B, take contrary action to that in markets that are very volatile like crypto. Those are going to really be big recipes for how much money we're going to make. But I agree with you. There's going to be less volatility going forward. When Bitcoin, if and when Bitcoin is trading at 800,000 to 1.2 million, there's much more institutional adoption. It's not going to have the upside it did at 5,000 or even 50,000. But it also won't quite have that volatility on the downside. So I think, in summary, this could be the last 10x bottom to top in the crypto cycle, possibly 10x plus. But it also could be the end of the 85% plus drawdown crypto winters, right? So that would be a natural progression. That's why this cycle in particular is very important. That's why I encourage people, you got to be in the game.
And it kind of goes to that point that you were saying, that be greedy amongst fear and all the rest of it. Because you can see it with the meme stocks taking off again. So we've just seen GameStop because of roaring kitty once more. But no one was roaring when it was at 10 and there was no roaring kitty. But roaring kitty comes out and it doubles, quadruples, and then suddenly everybody's lighting up again. The X sphere, the Twitter sphere. But that's the point that you've always made, which is it's got to be when it's on its knees, and this is across all these volatile assets. When everyone else is ignoring it, is when you want to be in there, and all the haters are out there hating you for it. And then when everyone's doing the fear of missing out, trying to pick the Bitcoin at 70,000, 80,000 or whatever, and GameStop at 40, 50, those are times when you want to be offloading or starting to take some profits. And that's always been your mantra.
Well, yes, but I mean, like if we look at where we are today, we're not exactly in like one of those extremes, right? So that gets trickier. It gets trickier as things go higher to say, hey, yes, I meet I get a massage at a spa, or I get, IV therapy at this conference, and somebody's talking to me about Bitcoin. And, 5 years ago, it was like, go open an app right now while we're doing this, go buy yourself some Bitcoin, and you're going to do very well. And now, am I that motivated to do it at 70,000? Not as much. You know what I mean? It's like, I was telling a friend the other day that as far as the next move, the immediate term move in crypto, I'm less certain about exactly if we're going to have like a shakeout with this consolidation, another couple of hard shakes, or one really hard shake, even maybe below the channel, to scare out some of the speculation we're seeing in, for example, specifically the meme tokens. I don't necessarily like to see that. And it's a little wild. I told that friend as well that one of the things I'll do on a regular basis, probably once a day, is I'll go on CoinGecko and I'll look at the top 1,000 currencies or tokens and see the top performers. And lately it's been 80% meme, pardon my pun, dog crap. It's like, it's just a bunch of junk, right? It's like there's no utility, there's no nothing. That's more of a sign of a speculative top than a bottom. So we have that going on. At the same time, when you're looking at the larger assets, they really have not, they've been acting very rational. If you look at anything from BTC, ETH, Solana, Internet Computer, Filecoin, some of the other ones that I like, Chainlink. One little bullish note that I feel like I'm watching closely too is Chainlink was one of the leaders of the, I don't know if you'd call it mid caps or the large caps, top 25 tokens. It led that run last fall and did it dominantly. And then it also cooled off first and started to, digest those gains. And, and then now it's taken off again. And if that starts to break into new high territory, I think that's a good sign. But, you have to take all this together. And I think the big thing to note is it all depends on your personal allocation and risk tolerance. Forget the noise. One thing I do feel extremely confident in is that over the next 12 to 18 months, 9 to 15 months, we're going to see a big run in crypto prices. And it's going to be parabolic in a sense, just like it has been for every cycle in the last, 14 years. And you want to be long already and ready when that starts to happen and starts to get triggered, that you're not left behind. Otherwise, people are going to chase stuff. And that's just the worst thing that you can do. So I have no doubt that is around the corner. In the immediate term, are we going to get a flush or not? People that are, high net worth individuals looking to build their net worth, you just need to be planting seeds right now. Do it while things are quiet. Do things while things are down. If you find some unique ideas and opportunities, I've found many in AI. AI in particular right now, I think, is a very strong buy in the token sphere, because a lot of those tokens have come off 50% or even more in just the last couple of months. And some of those plays have really intriguing tokenomics, technology adoption, network adoption. So I'm looking for things like that and not really worrying too much about the big things and the noise that I can't control.
Well, it's sort of, in some ways, maybe going into that space is sort of the right way to get the uncorrelated returns, because certainly I saw a chart, I think just today, this is the 3rd of June, which was the last big sort of good sharp ratio, highly uncorrelated move in Bitcoin was 2017-18. Since then, its correlation with things like the NASDAQ, as we know, has increased. Now, it's obviously a higher beta play on that, but it ultimately, Bitcoin is becoming much more of a sort of a liquidity on, liquidity off. And liquidity conditions at the moment are pretty good. So that should be good for Bitcoin and the others. But it does feel that again, that's the institutionalized adoption part of it coming to bear. So maybe, as you say, doing some research on some of the altcoins and the technologies behind them is the way to get that uncorrelated returns that people often would require.
I mean, at phenomcrypto.com, it's two things that I try to focus on helping with. Is one, when I see times to press or to be extra cautious or to, take more profits or deploy capital in pullbacks and kind of crazier environments in the space, I put that information out. And then number two is I isolate individual ideas so that people that don't have time, that aren't doing this stuff on a Saturday night at 1 a.m, looking for these little gems that I did in the last cycle, they can just take a shot, roll the dice, and, do it appropriately, not in any one particular name. But if you want to get some exposure to things that could, if they do work out, anywhere near what happened in the last cycle, that's something that I focus on too. So it's not for everybody, but I think that the big thing is for your audience, a lot of people aren't going to mess with that stuff. Just stay focused on your allocation in Bitcoin, ETH, and then, probably 3/4 of any crypto you have at least should be in Bitcoin, ETH, and the top 25 tokens.
So now, just completely changing the focus slightly, because the other bit to talk about, actually refocus is I'm going to go to the mining sector, because we must, if we're doing an update, we have to look at the mining sector. Gold obviously has been in this nice consolidation. So it's sort of taken a little bit of a back burner in some ways. There's been a little bit less talk because gold, 2400, etc. But you're still seeing some quite interesting nuggets, as you would call them, in this space. What's particularly taking your fancy that's kind of giving you more kind of happiness and more belief that, yes, whilst we might be consolidating, this story is building and broadening out?
Happiness. I don't know. Happiness from price action. It does actually, I don't know if it's a real deep happiness, but it is an emotional one. I think I'm just seeing the way that gold is acting. And, you look at technically, when you feel like the fundamental side of a story is on your side, or you have the beginning of a bull cycle, especially after a particularly fairly brutal 3.5 years of downward, sideways action in the actual metals prices, but in the equities where we play quite a bit, just nasty, and no capital flows or anything like that. And now we're in a position, a couple of things that stick out are like even the gold to oil ratio is in a very favorable position for the producers of gold and silver and other, precious metals and commodities in general are, it's a very good tailwind environment for beating earnings the next few quarters. So we'll see how that goes, but that is a very real metric. And I also think you've got things like the under coverage, the under ownership of this sector. These things are all in favor of what could be a pretty darn prolific rally that's still to come. In fact, I don't think we've seen anything yet. You've seen a bit of strength in some of the producers, maybe for partially that reason, just profitability and flows and valuations in general. But as far as like some of the smaller names, I mean, I see all these signs all over the place. The U.S. military just invested, it wasn't a lot of money. I think it was $14 or $15 million into Canadian miners in Quebec, because we're so concerned about supplies and copper and cobalt and some of these different metals. These type of things that are happening quietly, they're not really shining the light on this type of thing. I think, paying attention to those situations, seeing some of the excitement around just energy even. I'm starting to see more and more this connection between the energy in the ground and the energy in tech and how these things converge, right? Because everything from, if you believe in AI, how are you going to power it, right? The point being that they're going into the ground, Roger. They need things in the ground so that we can have this dynamic Web3 digital world, right? And an AI planet. So the more that I see that, the more that I say to myself, it's just a matter of time until I get a knock on the door for something like Phenom Resources, Carlin asset, biggest vanadium, industrial battery metal powered, could be the lithium of industrial batteries, vanadium, I believe, with not a lot of development or anything in the West, controlled by China and Russia, and a big problem for the West if we don't get our head out of our butt with regard to, look, these things can be used against us. But that's very relevant to this whole story. That's why I think I'm so attracted to these two areas. So I just feel like the whole environment, even though you can say, what are you talking about, man? You're talking about tech and you're talking about some, exploration company looking for whatever, copper. Well, listen, they are connected to a degree. I don't think it's been as clear, and it's converging.
It's probably the biggest story now in many ways. It's sort of bubbling away. And what's also interesting about it is that there is also a realization that actually maybe the speed with which the technology is moving is too fast for the ability to be able to get the stuff out of the ground and create the networks that we need to be able to go from being dirty users of energy to green users of energy and to massive users of data. A lot of people are talking about that we just don't have the mining capacity. So again, this goes back to, is this going to be first and foremost still the story for the underlying commodity, where the price will go up and go up until it sucks in yet more investment? Because as you talked about before, one of the reasons we've got a problem right now is because this is a sector that has been starved of investment capital for so long, since the 2012 bust, and then because of ESG and all that stuff. So we might get into this real scenario where we are moving so quickly, particularly with data and AI, that the networks, the energy production and transmission just can't keep up with it.
It's pretty clear this is going to be a problem, right? So, I mean, if there's any sort of trajectory even close to what we're seeing with the speed of adoption of, energy usage and what we're going to need to support this data revolution, it's an issue. So I look at that and I say to myself, look, what ends up accelerating supply in any marketplace? It's a higher price, right? So that is what we're going to need. We saw it a year and a half ago in lithium, when we had a lot of the hype coming into the EVs, and then people are saying to themselves, well, there's not enough, we've got to develop this lithium market. There's plenty of lithium in the earth. There just wasn't enough to really start to make sure that we had the supply chain set up for the growth that was coming, even if it was a spike and isn't everlasting. I don't know. That's not my concern or pitch. I look at that's why it's so fascinating when I go to a tech digital assets crypto conference in Austin, Texas, and I see the connection between that and the needs and some of the companies that I own that are going to be supplying the hard metal to develop what we need for them to flourish. I get excited or happy. I start to see the glimpses of that, and I just think that those things together, compiled with the lack of interest, the lack of investment, the lack of capital flows over the years, creates a scenario where we could see an upside melt up in metals mining companies, and it won't necessarily have to do with the monetary debasement and inflation situation with protecting yourself there. I'm just seeing a lot of brightness in the future, and that can equate to, I'll say this as the last thing, huge returns. And junior mining companies were my crypto. That's why I got into them. 20 years ago, 15 years ago, I started to get into junior mining stocks because the type of returns that I saw happen with discoveries or into a bull cycle when these things would get a little bit wild, you can knock out a 10, 20, 50, 100x in these plays without taking the venture tech illiquidity risk.
We're starting to see some very interesting breakdowns in some relationships. Dr. Copper normally does well when the economy is doing well, and if anything, as we saw with the unemployment rate starting to tick up, is normally kind of directionally not a good sign that we've seen there. That's when copper was making the new all-time highs. It suggests that what is now really driving this is maybe some of those supply-demand issues rather than the classic relationship to the economy issues. And
it's such a fork in the road. I've always had this perspective since it's really just firmed up. So to give you other reasons why I'm becoming more and more bullish is, I guess it's becoming more and more visible in the front mirror or front window, which is that back in 17, 18, there was a lot of speculative money coming into, say, for example, the Canadian miners that were in lithium, cobalt, vanadium, the critical metals, the EV type of stuff, which that does affect, and the battery metals and the whole shebang does affect the supply demand dynamics, because the projections I was seeing in PowerPoints of companies over and over and over for a couple of years, it was all pointing to like this 2024, 2027, paradox cliff, or, that was going to end up being a crossover of the available supply in these markets to the demand cutting above them, and then having deficits running. And that's, I was like, well, who knows? Who knows what's going to happen with EV adoption? It was very early. And I think it's been strong enough there and in other areas where we just see that there are massive gaps coming in not just the critical metals, but I would say they are critical metals like copper, like nickel, even silver. And silver having its monetary booster at the end of those bull runs is going to come in very handy. I think silver will be one of the most dynamic metals in terms of performance over the next, call it, 18 to 36 months. I think silver, you have to have some exposure there. It's hard to have the physical exposure because it weighs a lot, and not a lot of money. You have 15 grand worth and, weighs 42 pounds. So what do you do there? There's some tremendously valued mining companies that have been developing assets all over the world for decades that just are not getting the appreciation that they should. And we've seen silver break 30 on the upside, right? The 35 is on the way. And think about the fact that, people are getting excited about this. Silver was $50 in 1980, for goodness sake, right? I mean, there's something missing there. And so a re-rating is happening. It's going to happen. And there's a lot of money to be made there if that's correct.
Well, on that front, next week, I think what we're going to do is we're going to review some of the picks that you've talked about across this space. So in gold, in silver, in copper, and in some of the other metals. Because some of these things, we were laying them out back in November and December of last year, and we've been playing that since. So hopefully next week, we'll look at some of these names that you like, how they've done, and just some of the reasons why you like them, because we know that you like this space.
That sounds great. Maybe we'll have one or two new ones we can throw in there just to review and throw out there for people to check out for themselves. But I appreciate it. Thanks, Roger.
Brilliant. Good to see you.
You too.